Hey, happy Friday. It's February 25th. This is Mark Hines with your 4-minute week in review. I've got 4 points for you this week, as always. The first one, what happened in the markets this past week? Well, it was the best day for the Dow since late 2020. The Dow was up about 2.5% on Friday, which is a little bit shocking and surprising with all the things going on in the world. But to put that gain in perspective, we're still down near correction territory for the year. The S&P 500 is down almost 9% for the year. The tech-heavy Nasdaq is down over 10%. So what's going on? Why is the market down this year? There's a few things, right? First, there's that unwinding of the pandemic trade that we've been talking about. A lot of those naturally socially distant stocks had done so well after the initial onset of the pandemic. That ARK ETF is sort of a benchmark there, has now given back pretty much all of its outsized gains from the pandemic and then some. Also going on, we've got interest rates, right? The Fed is expected to raise interest rates several times this year. That tends to put the brakes on the market. The reason they're doing that is because inflation. The inflation numbers came in for January at 7.5% for CPI year over year. That's really high and it's dangerous, right? For those of you who are big savers, that really eats into your savings, that high inflation rate. So the Fed is raising interest rates to kind of attempt to slow down the inflation. And then we've also got the Russia-Ukraine thing going on, which got, extremely serious during the week, which is a little bit surprising that the markets were up. But at the same time, what's working this year, sort of oil, energy, commodities have been performing really well, as you would expect, right? With inflation going up, those types of assets tend to do really well. And then particularly with the things going on with Russia and the energy supply, you'd expect energy to be up as well. So what should you be doing in your own accounts, right? We always talk about not panicking, but don't make psychological mistakes, right? There's so much news flow out there. There's so many things to worry about out there. Don't make those psychological mistakes. Sort of related to that, what should you be doing in the week ahead or the month ahead or the years ahead even? I like to tell people sometimes that one of my all-time favorite investors is Rip Van Winkle. Of course, Rip Van Winkle is a guy who fell asleep for years and years and years and slept right through the Revolutionary War. And when he woke up, it was over and it was peaceful, and he had missed the whole thing, right? I think investors can learn a lot from that strategy, right? We say it a lot of times, the best investors in the world are dead investors because they can't make those short-term psychological mistakes. So my advice to you guys out there, what should you be doing in the week and months and years ahead? Make sure you've got a disciplined long-term investment strategy and then just stick to it, right? Don't let the media cause you to make psychological mistakes. Don't let the news flow cause you to make psychological mistakes. Yes, the market's down this year, but the market has had bigger corrections in the past. And historically speaking, the market has recovered every single time from every drawdown, even though every time everybody thought, the world was ending and this is worse and this is different than ever before, the market has always rebounded, always come back, and it's come back a lot higher than it was before. So, don't panic, stick to your long-term strategy that it's going to prove, it has proven over and over again to be a winning strategy. So that's it for me this week. Thank you very much, and I will see you next week.